pleasure to host Eicher Motors 4Q result conference call, and it's pleasure to host Mr. Siddharth Lal as well as Mr. Lalit Malik. Both are here. So now I would like to hand over the mic to Siddharth for his result comment as well as his comment on the outlook, etc. And then we can open it up for the Q&A. Thank you, and over to you, management.
Thank you, and good evening to all of you, and thanks for joining in so late on Friday evening for our call. We concluded our Eicher Motors Limited board meeting earlier this evening, and as a result, we have our results for Q4 of last year as well as for the full year of 2018-19. I'm going to go through some of the highlights of the financials and then the business highlights. So for the consolidated Eicher Motors Limited financials for Q4 as well as FY 2018-19, for the quarter we had a revenue of around 2,500 crores, which was down around 1% from the same quarter last year. And for the full year, our revenue was close to 9,800 crores, which is up 9% from the previous year. Our EBITDA was at 685 crores for the quarter with a 27.4% margin, and 2,900 crores approximately with a margin of 29.6% for the full year. Our profit after tax was 545 crores, down 16% from the same quarter last year, and 2,220 crores for the full year, which is up 2%. Overall, on the business side, Royal Enfield, we had motorcycle sales for the quarter were down 13% to 1.97 lakhs, and for the year we were marginally up from 8.2 to 8.23 lakhs for the full year. So that's 8.23 lakhs for last year. We continued with dealer expansion last year. We added 90 dealers for the year, 37 for the quarter, up to a total of 915 dealers. Internationally, we now have 42 exclusive stores across 19 countries, and we recently entered the South Korean market with the first exclusive store in Seoul. We've had an outstanding response last year. It was a big year for us from a new product perspective because we had a absolutely amazing response to our new twins, which have created waves in markets in India and around the world. So it's really a revolutionary product, in our opinion, which has had a great launch and initial phase in the first few months of the products being in the market with and consumers riding the product. We've launched and commenced deliveries in various international markets. Of course, India was first, and then after that, US, UK, Europe, Thailand, Indonesia, Colombia, Argentina, Australia. We've commenced in all of these countries, and things are going very well with all the top accolades and awards in India and in some markets around the world for our new twins. So we're delighted about the performance of our new twins. We've had other new products such as Bullet Trials, which we had as well more recently, and also we had our entire portfolio, which is an enormous endeavor, was shifted to anti-lock braking motorcycles well in time for the regulatory requirements. So we were able to shift our entire portfolio of motorcycles to ABS. Other highlights or let's say updates on Royal Enfield is Vallam Vadagal manufacturing plant phase 2 construction is largely over and installation is commencing. Production will commence in second half of 2019-20. Our Chennai Technical Center is near completion. The PD team has partially moved in, product development, and the rest of the team will move in by next month. And by the second half of this year, the admin block will be up and running and the teams will move in. So that will be the full move to the Chennai Technical Center from various small and rented offices that we have across Chennai because of the growth we've had over the last many years, and including, of course, in some of our old locations like Tirupati, etc. We also completed a very important ride, which is called One Ride, the 9th edition of that, which is one of the largest motorcycle community rides in the world, with participation from 305 cities across 35 countries. And we had 15,000 enthusiasts in India alone from 187 cities and towns in India. So it's a big ride that we conducted, the same day around the world, and it went off really well. So that's on Royal Enfield business. On VECV, I'll tell you both about the financials and the business. Our revenue for the quarter was just over 3,200 crores, and for the year was 11,600 crores, which is an all-time high. The EBITDA for the quarter was 274 crores, and for the year was 973 crores, giving an EBITDA margin of 8.6% for quarter 4 against 9.5% last year, largely because of very heavy discounting and some fall in volumes. And for the full year, our EBITDA margin was 8.4% as against 9% last year. That resulted in a profit after tax of 139 crores for the quarter and 475 crores for the year. Trucks and buses sales, for quarter 4 were at 21,000 units, down 9% from the same quarter last year. But for the full year, we closed at 73,000 units, up 11% and an all-time high of 73,000. And the 11% growth last year was broadly in line with the industry growth of 12%. The second half of last year, of course, was impacted by various issues, such as the implementation of the axle load norms, which reduced demand for some time, and some liquidity constraints with NBFCs. And margins were under pressure because of all-time high discounts and disruptive pricing, and where we want to make sure that we continue our profitability as well as growth and market share. So we try to have the optimum balance of all of these. We've had excellent progress on our new products as well in trucks, with the launch of new Pro 2000 series of light and medium duty trucks, of our new electric bus, as well as the industry first 7-speed transmission, and new products based on the new axle norms of 48 tons and 55 tons. So all of that's come in the recent past. We've also successfully entered into 2 new international markets, in Indonesia and in South Africa. In these markets, we've gone with the UD brand, which is owned by Volvo. So Volvo is distributing our trucks in these markets under the UD brand, and we see an enormous potential, or good potential, in these markets in the coming years. And that's all from us, from Eicher Motors for now. So over to you for questions now.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Kapil Singh from Nomura Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Firstly, I wanted to check, when you are looking at the sales currently, what is it that is impacting them? If you could give some color on both how inquiries are moving and how the conversion rates are moving, and top 2 or 3 reasons that you have assessed which is impacting them.
So nothing happened in the quarter. But the larger trend that we've seen for the last 3-4 quarters, or I would say 2-3 quarters, there has been a bit of a drop in inquiries. And largely, this is like post-Diwali time for us at least. While the Diwali retails went off exceedingly well, but after that we did saw drop, and you can attribute it to slowdown, increasing the price bikes and so on and so forth, and that continues so far. So overall we also had a bit of a when you are large and when you're dependent on a few states, then all these problems also begin to hit you till the state issues get repaired. Kerala went down for us after the floods. It's come back, but certainly not to the extent that what it was doing for us in the past. a larger proportion for us as opposed to others as with the CSD sales. So I'm giving you all the answers now and without you having asked so that others don't have to repeat. CSD sales as a proportion of our overall sales is quite large. February and March, the government did no CSD sales or CSD buying from their perspective. If we had all the twins that the market needs, both India and internationally, then, the numbers would be, and the ASPs and all the stuff would be very, very kind of different. So these are the broad 3-4 things that I can speak about.
Okay, and is there a drop in conversion rates as well?
The conversion is largely the same. So inquiry to booking and booking to sales, there's hardly any change. Okay. It's just the volume of folks who are coming in physically to the stores, that's a lower number than the past. Okay.
And just one more question on your material costs and other costs. We have seen a sharp increase for the quarter. Is there any one-time items there, or this will be the normalized run rate for both of these?
So the material cost is still stabilizing post the 100% conversion to ABS that happened in Q4. So there is a bit of a stability factor over there. In the other expenses, other overheads line, Q4 had a lot of, especially the international markets, there was a lot of activations, things being done, because the bikes, the twins, were reaching their end of March and first week of April. So between Europe and Southeast Asia, there's a whole lot of stuff being done. South Asia particularly, I have to say, this is a trade show time also. And we participated in a few of those around Asia. So it was largely that kind of, you can call it one-off, but yeah, that kind of stuff.
Okay. Thanks. I'll jump back in the queue.
Thank you. The next question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity. Lalit, just a clarification on the CDC sales. Have they resumed from April onwards, or they still continue?
Yeah, but yes, they have. But with a very different process and absolutely not to the same level of buying that they were doing earlier.
So is it a transmission issue in terms of the process changing, or you see structurally demand incrementally from CDC to be lower?
No, it's not about the demand at that level, but it's the whole process. The new process that they have kind of moved into and got to do with some amount of government funds as well.
Okay, yeah. So my next question is basically on the demand outlook now. Now we know what has played out in terms of the slowdown, and we have seen some bit of improvement in the April print in terms of retail versus wholesale trend. And but how do you see FY20 as a year onwards, and and you guys have a fairly aggressive production target. So in that context, I'm assuming that demand shouldn't be very far the way you look at it. So, but if you can just talk a bit more about the FY20 outlook as a year as a whole, and probably also highlight factors which can decide the extent of the volume recovery.
So look, generally speaking, I mean, given what we do believe the market should, for us, the market should end up, and so you can call it optimism, you can call it a stronger view, and so on and so forth. That view is equal to 9.5 lakhs production for the year. So that's a general view. And as we have gone down the list and saying where it is going to come from, how it's going to come from, and all the stuff. So there are plans at play. We still believe, 100% we still believe, and time and again, all matrices around the brand and the brand pull and all the stuff are still very, very secure with us. The twins are doing the job exceedingly well. It's not about the volume and all the stuff for the twins. It's a general halo they throw on the entire brand. And like I said, if the volumes were what the market needs, then you'll see a very different kind of franchise. The problems will be there. There is a general slowdown, especially from the customers who are non-salaried class. There is a bit of a stretch at their end, in their cash flows, in their businesses, and so on and so forth. So there are all these little events, not little events, there are these events, especially around the BS6, nobody really knows as to what's going to happen, how it's going to happen, which month, and so on and so forth. But generally, the brand is exceedingly strong. Generally speaking, the premiumization trends in the country are intact. I mean, a quarter and a two here and there is not going to change that too much. So we remain very bullish about the way the company is going.
And second question, a final one on the commodity versus margin, because this is an unprecedented transition for the industry and especially for you guys, because you have the full ABS impact and then the full fuel injection impact coming in. So generally, and the way the costs are going up and the demand environment, definitely one can't be expected to make margin on the cost. So would you, in a way, look at how should one look at margin versus the EBITDA or the EBITDA per vehicle? Because if I look at this quarter, fourth quarter, YOY, your EBITDA per vehicle is actually not changed much at all. It's down by 2% or thereabout, whereas volumes have fallen by like 14%. So is that how you look at internally, or is it like there is a margin, there is aspiration to kind of claw back some bit of this percentage margins as well as demand recovers?
So you can't ask both the question in the same breath here. So when you're saying the demand is not so great and all this stuff, and then you're talking of retaining the margin also. Like I said in the last call also, the effort generally is to retain the margins. But quarter on quarter, you might not be able to do so. There will be other headwinds on the commodity prices and so on and so forth. So far, right now, they look a little benign. But then who knows, when they start pick up kind of once again. And like I said, for now at least, the ABS costs are settling in. And hence, largely, we are able to protect the margins. On a happy note, I have to say.
Thanks a lot.
Future will come in.
Yeah, no, that's fair enough. Thanks a lot and best of luck. Thank you.
Yeah.
Thank you. The next question is from the line of Mihir Zaveri from Avendus Capital. Please go ahead.
For this opportunity. I want to ask one question on demand side, what we said. Basically, if we look at our run rate right now, is around 63,000 vehicles. In last year, we had an average, we had around 69,000. And given the scenario what Lalit just spoke, is it also a possibility that basically we could have a flat to negative volume this year, given the kind of environment we are in? That's my first question with regards to demand.
So, we are working towards a growth in the business this year. That's our objective. Honestly, we can't say what it will be and how the market will pan out. And beyond what we're saying as a production target that we're taking this year of 9.5 lakhs, we're not giving any further, let's say we can't, beyond this and beyond the fact that we're, as Lalit said earlier, we're working towards a growth objective this year. Right? There's not much more we can say right now about what our projections are for sales. So yeah, we're certainly working towards changing the momentum right now, and which certainly could happen over the next 6-8 months.
But Siddharth, just one question, given that the production guidance is also 950,000 for this year and it's the same next year as well, but there has been a huge gap between what we have sold and what the production target was. So that's why I asked this question. Secondly, in terms of margins also, if you see your gross margin, there's been a gross margin erosion this quarter. So would it be fair to assume, or how should we look at it given that the 650cc has come into play, whether 650cc has similar kind of margins or lower margins? Because we have seen that gross margins have come lower, even the EBITDA, which has obviously populated into EBITDA margins. So how should we look at margins going ahead, even with higher 650cc proportion being in the mix?
Yeah, so generally not always, but generally a new product will start its life slightly lower on the margin scale, and then it will over time, as traction builds up, it will, and that happened with our Classic as well. We started with perhaps 20% margin, and it went up to 40 plus eventually. So we start life slightly lower. Once the volumes pick up, you get a double effect of being able to increase prices slightly higher than the cost increase and lower cost substantially, which has happened in the past for us. So that's the game we're playing, and eventually I would say a higher CC platform will have more potential for margin than a lower CC. It's just relatively natural, but that will take a bit of time to get there.
And lastly, just I want to check out the inventory level situation right now. What's our inventory level?
Sorry, come please. So inventory, dealers pay for what they ask for and what they get. So inventory cannot be out of control in that sense for us. Generally speaking, overall we still have about 20-22 days of stocks across the dealer and the depots and all this stuff. So pretty much in control.
Thank you. Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Securities. Please go ahead.
Hi, so my question pertains to the margins comment which you made about protecting margins. So we are looking at the new range at around 28-29%, or we see some upside to this based on the cost-cutting initiatives?
So right now, we're reporting a margin of 27.4%. So, it's at that range only, right? It's that range we are saying. Now you can define the upper and the lower limits of the range, but generally around that range, which means that it's a strong brand needs stronger margins, big margins. And that's what it is. So like I said, some of the ABS costs are not stabilized yet, so it will be in that 25 to 30, if you want to range from me, 25 to 30% kind of a thing.
No, actually, what I meant is there scope of further cost cutting? I mean, I understand we have been in that process for some time now, and with quite a bit of benefit coming through. Do we see substantial scope further from these levels of cost cutting, or it would be hard to come now?
So right now, the objective is, for example, to move to the newer technologies and to do it in time before regulation. So whether it was ABS, whether it's BS6, over time clearly because both of these technologies, for example, are new to the country. New in the sense that for scale manufacturing, they were new. So over time, there could certainly be potential in reducing costs in the medium term, especially in the newer technology areas. On the other hand, there's also pressure to not perhaps pass on the entire cost increase to the consumer, and you may not make margin on that amount you pass on. So there's a bit of give and take on both sides of this equation. In the short term, there may be some more squeezing of margin just because you may not pass on the entire price increase in one shot or cost increase in one shot, but we also expect some cost reductions to come in, certainly on the newer technologies which have not been made in scale in India. So ABS, fuel injection, very small numbers have been made in India before the regulations actually came in. And now the production has started in India by the suppliers. So there are more suppliers coming in the market, and therefore the cost should come down over time as well.
And for BS6, are we looking to launch it much ahead of the timelines, or we would be trending towards Gen 7 March?
We are getting ready for BS6 well ahead of time, but we will take a call based on inventories and how we're going to flush out old inventory and be ready for the new product. So that's the tricky part, but certainly we're not going to go too far ahead of time either. We'll manage from an inventory perspective, really.
Okay. And lastly, with respect to the management addition which has happened and changes which are happening in the company, can you throw a bit more light on it about what's the game plan now, with Mr. Dasari coming in, how does the role division happen, what to expect, that way?
Yeah, so Vinod Dasari has joined as CEO of Royal Enfield on the 1st of April, and he's been in that role for 5-6 weeks now, and it's still early days, so he's still assimilating, and like I said, it's an excellent opportunity for him. Of course, the role division is that he runs the company, he runs Royal Enfield entirely. He's the CEO and fully responsible, in charge, and my role will be to support him in various areas, including on a few specialized areas of product brand where he has currently less experience, whereas obviously as a CEO he's got full experience on running a business, etc., which he's taken full charge of already. So I will support him in certain areas, of course, but other than that, he's entirely responsible in running the business. So that's already happened. It's already started. It's also a great time. There's a new CEO. There's, let's say, a shift in the business in some form where the enormous growth trajectory that we had gone through is tapered off a bit. So it's an opportune time to be able to look at Royal Enfield 2.0 and how we're going to take it forward. So that, of course, is work in progress. There's still lots of things that we're working on and Vinod is leading. So you'll certainly hear about that more in the future when there are more plans that we can talk about.
Sure. And does Vinod also contribute or share his expertise on the VC business side as well, concerning his background?
So Vinod is CEO of Royal Enfield, so his primary focus is certainly in Royal Enfield. Of course, he's also a board member of Eicher Motors Limited, which is the where we have the holding for VECV. So, there is some support and influence that we can expect from him over time, not yet, but his primary focus is certainly on running the Royal Enfield business.
Understood. Great. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Gunjan Prithyani from JP Morgan.
Yeah, hi. Thanks for taking my questions. I have two questions. Firstly, on twins, you did mention that, the numbers would have looked very different if twins would have been, if you would have delivered twins. Is there anything you can share on the order book or the capacity ramp-up of twins, where we are and how we are looking at ramping it up through the year?
Yeah, the twins are, like I said, they've got a very strong pull in the market. There's extremely strong reception. Again, in context, there have been the sales of, and I'm talking about India first, the sales of motorcycle above 500cc class or above 2.5 lakhs till Royal Enfield entered that segment were perhaps 100, 120 a month. Since we've entered, we're doing maybe 2,000 we should be doing in a month or more. So we've really expanded that segment tenfold already. The segment of above 500cc or above 2.5 lakhs. So there's a huge impact, I think, from an industry perspective, and it's very early days because as you see in the automotive industry, when a product is seen as successful and it's done well, to a certain point, then even more people actually start following. So we believe that more and more people who are interested in upgrading a motorcycle will see the twins as a very interesting proposition. So we're extremely hopeful of the twins growing into a very strong franchise over the course of the next few years. In the meanwhile, our production rate has gone up to, I think, it should be around 4,000, 3,500 last month, give or take, and increasing to 5,000 in July. So that's the overall twins production. Currently, nearly half of that is being exported, and the rest is for the Indian market. But beyond the point, it will of course be based on demand, based on orders in the different markets. But right now, it's around 50-50 for international and Indian market, which is a very high proportion going to international markets as well right now. So order book, the waiting list in India is about 4 months right now for the twins.
And you mentioned this is 2,000 units a month, kind of a booking run rate that you're seeing right now, right?
No, I was talking about the 2,000 as, I don't have the exact number in my head right now, but the sales in India last month must have been around 1,500 to 2,000.
1,800.
Sorry? 1,800? Oh, sorry, April was 2,000. So sorry, I got the number wrong. So April we did sell 2,000 in India, and that was the 2,000 I was talking about. So, and I was saying that the industry of above 500cc or above 2.5 lakhs was in the order of 150 to 200 before that. So we've increased the size of the industry tremendously. So that was the 2,000 number. That was India sales last month.
So this was essentially the wholesales that you're talking about. I was just trying to understand if you can give any sense on the retail side. Is this a similar number that you're seeing in terms of booking run rate on the...
Yeah, there's a 4-month waiting. So every wholesale is converted pretty much immediately to retail. There's no lag right now in wholesale to retail really.
Okay.
Or minimal lag.
Sure, got it. And second question I had was on the dealer expansion. Now we've continued to expand even until last quarter, and clearly the sales run rate has come off pretty meaningfully. So I'm just trying to understand, how are we approaching the expansion? Because are the more expansions focused in existing markets, which will then cannibalize, the existing set of stores, or most of this expansion is in the newer markets? If any sense you can give on how we are approaching this expansion?
No, so obviously the newer markets only, smaller markets, in slightly, as you would like to describe, under-index markets. So the big, developed markets where our market share is more than the national average, hardly any expansion is happening over there. So these are much smaller stores, much smaller catchments. These are not pulling in the same, from a value weight perspective, the same stuff that we do in Mumbai or Delhi. So this will be, places like East UP, Bihar, Jharkhand and all this stuff. Much smaller stores.
Okay, and last on the financing, if you can give some sense, has there been any visible change in the last couple of months? And how is Twins also, seeing higher financing?
Generally it's all been around 50-55% odd in that range. So no change we have seen. Financiers are still eager to finance us, so I'm not seeing any liquidity or any shyness in terms of offering finance to the customers. So no change to report.
Okay, thank you so much.
Thank you. The next question is from the line of Venugopal Gare from Bernstein. Please go ahead.
Hi, thanks for the opportunity. Just a small question on conversion rates. In the call you mentioned that it's more about footfalls reducing, but the conversion rates are fairly similar. So wanted to understand that from a dealer point of view, is there any messaging to move to now a push mode versus a pull mode that we have been in for the last 8-9 years? And the reason I'm asking that is, even when we visit stores or some of my friends who would be potential customers, they don't really get any phone calls after a test ride, let's say, in a week or 2 weeks time frame, but we do see that from competition. I mean, not just competition in, which is direct competition for you, but even for cars, So is there any change in the marketing process at a dealer level that we think we need to do at this stage, or is it dilutive to brand?
Oh, not at all. I think what you talked about is not push versus pull. Perhaps if some of your friends are not getting a call back, that's a failure on our part, and that's certainly not our objective to be cold to potential customers. That's not at all the case. In fact, on the contrary, we're rolling out extremely, I would say, strong processes on customer engagement at dealers, which goes well beyond handing them a price list, which is the norm in two-wheeler industry. So it is really to engage in selling the right product to the customer and in understanding their needs, in giving them test rides. So we are totally committed to selling and selling well. But it is selling well rather than, in fact, selling shabbily. And selling well doesn't include, discounts and all, but it does include very good follow-up, very good customer engagement, relationships, and support. So if there were some failures there, of course, we are working hard to fix all of those. But it's not a push as much as engagement of intending buyers that we're trying to accomplish, and then touching them at the right opportunity later after they've done a test ride and all to get them back into purchase. So we're certainly selling, or let's say a strong sales idea, but in the right perspective of how Royal Enfield should be bought. Any other questions?
Sure. But I think it's very clear. The second thing again on the dealer side is more a very generic question. See, essentially, volumes have decelerated fairly sharply in the last couple of months. I mean, it's of course an industry-wide phenomenon, but just to put in context of here on dealers, since there will be a wide dispersion in terms of volumes across dealerships, is there any talk of any support the dealers would ask you at this stage, given that their profitability would also be under pressure, or is it something which is too early stage and not a bother at all? I mean, eventually for me it is about any impact on margin for you. So that's the ultimate perspective with which I'm asking.
There's no particular support or anything required. Of course, we're working closely with our dealers, and certainly what happens when sales have fallen off a bit is in a period of excellent growth, you're able to, all dealers are able to rise with the tide. But when it starts moving the other way, you're really able to see which are underperforming dealers, and then we're working with them either to improve them or to change them or whatever it is. So it's more of an opportunity to see which are strong dealers, and there's some dealers which are continuing to grow and hold their own and grow further. So others which are falling off more sharply. So it's an opportunity, I see, more to clean up some areas, to certainly to support dealers where, I'm not saying financially, but I'm saying to, basically our objective is to support them in doing better business. So it's in better selling skills, it's in better conversion ratios, better tools for them to be able to convert better. We've got a whole new, and I would say very good and sophisticated dealer management system, which is in implementation phase, along with our the large amount of training and process that we're putting into dealer side for them to be able to improve conversions. That's very much a part of our ratio. And where dealers are not able to rise to the right level of customer experience, then, you know, we give them a lot of support and opportunity, but then we have to replace them if that's the case.
Thanks a lot.
Thank you.
Thank you. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. First, a housekeeping question. Just wanted to understand on this.
Chirag, louder please. Your voice is...
Yeah, am I audible
now? Yeah.
Yeah, first a housekeeping question on this raw material cost for the quarter. If I look at RM to sales at 53.5, and which is like, which has not been seen in many quarters. So is it largely because of inventory correction that you would have taken, or what are the drivers for this sharp jump in RM to sales, be it sequentially, be it YOY, or even if I look at earlier quarters, this is probably high since the last 12, 13 quarters probably.
So like I mentioned earlier, the cost of new technology, especially in Q4, when the entire portfolio moved to ABS. That and the slight commodity costs going up and down, largely were the two reasons. There is nothing else in there.
And so is commodity pressure abating, or is it neutral going ahead, or how do we look at that?
Yeah, between March and now, it's a little better than it was, say, prior 2 months, 2 months prior to that.
And would it be a right statement that given the demand scenario, your ability to mark up this ABS cost would not be significant, at least in the near term? It would be a right statement, or you would not be looking to...
Sorry, come again, please?
This ABS cost increase, it would be difficult to do a markup on that in terms of margins, at least in the near term, till demand revives.
Chirag, the numbers you're saying reflect the fact that we have done a markup on the costs.
Okay, fair point. And second was on this other expense. So is it possible to indicate how much of this other expenses was attributable to international expansion? How big that part would be for us in this?
Nothing, almost nothing actually. Like I said, this has all got to do with the various BTL activities, some in India, but like I said, mostly in Europe and Southeast Asia. Primarily as the twin was being, this is a launch time for twins, I mean not now, but I think April beginning was the launch time for twins in Europe. And a few countries in Asia as well, and Thailand has, a couple of these big trade shows and all the stuff. So, and Thailand is a very promising market for us now. So these are those kind of expenses. It's a long list, but all BPL largely.
Okay. And one last question, if I can ask, on the demand side again, and on the product side rather, would it be a right statement to make that there is some kind of product fatigue, and unless the new product cycle starts, the old following that we had for the brand is getting slight fatigue because of lack of engine upgrades or transmission upgrades over the period, and that could be one of the reasons of this slowdown?
Well, we don't believe that. We look at our all the data and surveys and brand track and individual model level that we have, and by and large, in fact, we're tracking very well. And of course, since the twins have come in, we've got some bump in the brand and brand track service. So there's not like that. Certainly, there is, more, on the one hand, there is more ubiquity of a classic 350 in the market. But as you know, higher visibility also still drives higher growth. So there are both sides of that coin. So right now, I believe we're still at the phase, certainly in more mature markets within India, that means big cities and richer states, certainly the classic 350 is not growing anymore, and there we're going to see Himalayan, Interceptor, Continental, GT are going to do the heavy lifting for us to grow the brand. But as you get into smaller towns, the Classic 350 is still exceptionally aspirational and drives an extremely high level of aspiration because they're coming from a totally different point of view and perspective, and there's nowhere close to that level of, let's say, ubiquity there. So there is both sides of that coin, and we believe that that's, the Classic and Bullet have an enormous franchise. The Bullet has been growing a bit in the last many months also. So certainly as a percentage of our portfolio.
Why I was coming that once you transition to BS6, and we presume that there would be a reasonable upgrade to the product capabilities also, would it bring back the mojo for even Classic and the Bullet brand? That is what I was trying to refer to in your assessment. In the matured market I was referring to.
Yeah, that's always the case. I mean, with the new product, the endeavor is always to, and it's certainly for us to always take the best of what people liked in a product and improve the areas where improvement is required and give a fresh outlook to a new product, as it were. So that goes without saying. As and when there's a new product which replaces an existing one, the endeavor is certainly to give the franchise a shot in the arm. So, of course, when any of our existing product is replaced, that's absolutely the endeavor, as you're saying.
And Lalit, one clarification on tax rate. Is it possible to indicate what kind of assumption we should go ahead for next 2 years? Because this year our tax rate seems to be slightly on the higher side at 34.5% on average basis.
I don't know, for your modeling, you continue with the same assumption, and I don't see that coming down significantly in the next 1 year.
Yes.
And also, we keep talking about mature product, mature market, product fatigue, and all those things. I mean, the general point is that 50% of our so-called customers own us for less than 2 years. So let the product be really old and really mature, yeah, and then we'll say, fatigue is coming in, setting in, and all that stuff. So people for users were, I think, slightly more loosely than what they intend to do. But we are still a very, very young company, commercially speaking. And, sorry to extend your question a bit left and right. So when, there was a time of 2 years back when we were seeing percentage-wise, lesser 500cc bikes, but then we only had a 350cc and a 500cc. And all because as we were entering into some of these markets of North India, of East India and all the stuff, we saw that the 500 guys were not that many over there because they said, we are so new to Royal Enfield at this point in time in terms of our buying. While we made load of brand for decades, but we're still buying it for the first time, I'll go with a 350cc bike. So the 500cc bikes over there was like virtually zero. But now there is an early trickle of those chaps who own the bike for 3 years or some such like that. So as those customers mature in the terms of the riding behavior and the riding habits and so on and so forth, then is the next upgrade when they look around, they may look at a Himalayan or at present, the portfolio that we have, when we look at a Himalayan or look at the Interceptor or the GT, that time has not even come for us to call off some of these, some of these products as being mature.
Yeah, thank you. This was helpful. Thank you. And all the best.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Yeah, hi, good evening. Thanks for taking my question. So just on that, so should we, see, given that the BS6 is a major change, a full upgrade, a full change in terms of your engine and products, so, would we see a sort of a full makeover for the lineup, really speaking?
You'll have to wait and watch for that. New product.
No, but
would you need BS6 norms, and then there is some level of new product, but you'll have to see exactly what we're not announcing it, level of changes on the product.
Okay, but so your existing engine range is upgradable to BS6, or do you think you'll have a new engine ground up sort of?
Again, we have various engine platforms, and I don't want to get into, and we're not disclosing specifics of which engine, what we're doing, so we're not going to get into that. The baseline is we're 100% meeting BS6 well in time for the implementation, and there is some new product also on the anvil, but we'll tell you only when the time is right for making any announcements.
Sure. And my next question was on the, in terms of market share, because, yes, you have, if I look at the 150cc plus market, obviously this year there's been a bit of a slowdown for you. So you seem to have lost a couple of percentage points of market share, but I'm cognizant of the fact that on wholesale numbers are very divergent this year given the amount of inventory a lot of other people have been stuffing in the channel. So on your retail, in terms of when you look at the retail numbers, how do you see your market share has trended for the full year? Is there that, have you lost a couple of percentage points or it's still pretty much closer to much lesser than that?
Yeah, if you look at 150cc plus, we have, because that's a very broad market in a sense, we have lost a little bit of a couple of percentage points. Even, wholesale, retail, if you equate it, is similar. That's also because there have been some very cut price 150cc bikes that have come into the market, so which are really low price. So they're nearly like commuter, which are 150cc in nature. But so it's honestly not really a market. A product coming at 70,000-75,000, if I'm right, is not not affecting us really. But because if you look at it from a segment perspective, sure. So yes, we have lost a bit of ground there from a 150cc plus market from, I would say, 27 to 25 or something like that. Yeah.
But you don't see that at a broader level that there is some sort of a down trading by consumers?
No. In the short term, there could be anything. There could be something which pulls certain consumers more, etc., and that tends to happen. But I don't see that concept existing in terms of down trading. Really, it's really, for the majority of consumers, the direction is towards upgrading, and that continues. So I don't see we're not seeing anything in the market that's changing that at all.
Right. And just lastly, could you tell us what is the capex for FY20?
700 crores planned.
1,000 crores.
700 crores planned across new Vallam Valigar plant phase 2, across technical Chennai technical center, all of our new product, and some commercial investments as well. So all of that put together is in the order of 700 crores.
Okay, thanks a lot.
Thank you. The next question is from the line of Jay Kale from Elara Capital. Please go ahead.
And moderator, we'll make this the last question as well. Thanks.
Yeah, thanks for taking my question. So my first question is basically, when you do have, say, 2-3 years production and sales planning, how do you look at the market, your growth versus the market growth? Would you be factoring in, are you outperforming the market? And if that be so, then last 6 to 8 months we've seen some bit of market share loss for various reasons. If at all you all plan to outgrow the market, what according to you should change from the macroeconomic factors or from company-specific factors for you to start outperforming the market going forward if and when the industry revives? So is it that your customer segment maybe currently is more impacted because of certain macro factors which where once reverses, you could again start outperforming the market? Because we have seen some bit, like the earlier question alluded, we have seen some bit of downtrading in the market as well. So what should change for you to start outperforming the market?
Well, as and when the sentiment becomes better and the market starts growing, and there's a host of things we're working on to do that. Our ambition, our belief is that, firstly, the short term, anything can happen for a quarter or two, but certainly in the medium and long term, we see no reason why there's a change in the overall shift where there's premiumization in the market. That we believe extremely strongly in. And again, like I said, that will always happen when the right value proposition is there for the product or for the customer. Value proposition is not just in product price, but product price, place, availability, all of that put together. So with the right distribution, with the right product price point. And so therefore we have plans on all of these fronts. We have a lot of new products coming in. We have a lot of very interesting things going on. Apparel, accessories, moving more to experiential areas, rides, community. So we're amping up all of that which is what draws and attracts and inspires people towards Royal Enfield. So it's really that rational plus irrational, let's say, desire that we create, and that's the thing that we continue to do. And we believe that with all those things, that the combination of all of these factors, including an outstanding distribution service and support, we should certainly outpace the industry in the long term. That's very much our ambition.
Okay. And just if you can just help us with exports and spares revenues.
Sorry, come again, please.
If you can help us with exports revenues and spares revenues for this quarter.
Look, quarter-wise, we don't break it up, but very soon we'll have the annual report out. You can see for sure what we have, how we have done last year.
Okay, sure. Thanks and all the best, sir.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Priyaranjan for closing comments.
Thanks everyone for joining, as well as management team for taking your time out for the conference call. And now...
All right, thank you very much.
All right, thank you. Thank you, bye-bye.
Thank you very much.